Back with closing trades, I'm just taking a look at some of the stocks that are soaring today, and the one to talk about is Godrej Industries. It's locked in upper circuit of 20% on the back of new announcements of a new purpose, new brand identity, and more importantly, a 5 lakh crore rupee ambition to grow by 2031. So that's a stock that you want to be watching out for on the charts. 20% looking very solid for Godrej Industries. Let's welcome on board Mr. Arpit Beriwal of Motilal Oswal Financial Services. Arpit, hi, good afternoon. Give us a sense on your chart check and your reading rather on Godrej Industries. A very solid 20% up move. What are the kind of levels that you're spotting?
Very good afternoon to all. So if you see, the stock is already up by 20%, and if I look at the monthly setup, so definitely the stock is seeing sharp recovery from lower levels. In fact, in the series of April and starting of May, we have seen almost a 50% jump from 800 to 1220 levels. And if I look at the setup on the monthly time frame, the next major hurdle is around 1300, 1320 levels. So a sense is that looking at the setup wise with a good volume, sir, the stock can head towards 1280, 1300 levels. However, on the hourly chart, it is obviously seen a sharp up move, but the next level to watch out would be 1280 to 1300 levels. So people, those who have bought it at the lower level can book profits near 1300 levels with immediate support around 1180 levels.
So many earnings reactions today. If you just pick the FNO picture currently is at, but just looking at the index right now, 64 points of a dip is what you're seeing. While of course, Unilever, Nestle, etc. have been under pressure today. IT as a sector as well has been underperforming. But there are others like an SBI, Bharti, Reliance, HDFC Bank, ICICI Bank. They as well are a lot more tempered in trade. But the one chart that Kunal just flagged off was crude. Let's just see. I think crude has seen a dip below that $100 per barrel mark. And that seems like a good sign. Where is currently NYMEX at? 93.16. And on the Brent, we're currently at $99.31 to a barrel. So that definitely is good. Europe, though, has started off in the red. It's flat for the DAX right now, marginally soft for stocks 600, FTSE down about 0.6%, flat for the CAC as well as the FTSE MIB as well. So a little bit tempered, so to speak, at least the European markets. The pre-market rates for the future, they as well are indicating a very, very flat start. The Nasdaq, the S&P and the Dow futures right now are absolutely quiet, eyeing the developments in Iran, and this after a very, very strong handover coming in overnight. But just looking at the picture right now in the market, Polycab, and that's been quite the move today in the stock, as has been the case with Paytm as well. Arpit, analyze these two charts for us, Paytm as well as Polycab.
If you see overall the cable space, we have shown a very strong outperformance, whether it's Polycab, KE Industries. So first, if you talk about Polycab, a classical range breakout on the monthly time frame after consolidation above 8,800 levels. Strong bullish candle. Today we have seen a sharp surge, a range breakout. So looking at the setup wise, definitely the next upside momentum can be seen towards 9,500 and positionally 10,000 plus levels. So Polycab major structure is positive with major support around 8,500. The stock can head towards 9,500, 9,800 levels. Whereas we talk about Paytm, so it's more of a reversal candidate. Post earnings, we have seen a good reversal from the lower levels. And if I see the weekly setup of Paytm, it is almost on the verge of its range breakout above 1220. So the first move have already played out till 1220. Once it closes about 1220 levels, the next up move can be seen towards 1320, 1350 levels. So overall, both the structures are positive with a 7 to 8% upside momentum in next couple of weeks time frame.
Okay, so that's on Paytm versus and Polycab rather, both of the strong performers in today's trade earnings, and they're reacting on their earnings. Kunal, give us a quick chart check on something like a Wockhardt. We've seen double-digit gains in the last couple of trading sessions on the back of some very strong numbers that the company reported. And today, finally, we're seeing some profit taking on the stock. It's lower by about 4%. Good time to make an entry into this stock?
It's a good time to enter into the stock price, but then we have to remember that such stocks which run up 20-30% in a span of, I think, 2-3 days, they would probably have a propensity to try and even correct by more than 10 to 15% in a matter of, or in the subsequent next 3 to 5 days. So for a short-term term, one has to be ready for this kind of a high beta move into these high beta stocks. The volumes in the last 2 or 3 days prior for Wockhardt Pharma were quite huge, because I think on an average volumes for the stock was around 5 lakhs to 6 lakhs. In the last couple of days, the average volume jumped up to almost 2.5 odd crores on the NSE itself. So that tells you that there's been a huge amount of buying which is happening to the stock, and I think this kind of a dip is something which one needs to take advantage of. So it's a good zone where traders could look at a buy at 1650 levels. But just as I said earlier, that just be ready for maybe some bit of more volatile price action. If it drops down to sub 1600 mark or 1550 levels, approximately that range, that's a zone where one could look to buy, accumulate further.
Okay, so that's on Wockhardt. Before we slip into a very short break, just drawing your attention to the bottom of the screen, Nifty Midcap 100. That index has hit a record high. It's led ahead by names like Paytm, Polycab, Bharat Forge, BHEL, Hitachi, Bharat Dynamics, Hero MotoCorp. That list goes on. From that basket, you have 62 stocks that are in the green with about 38 in the red. But yes, a fresh all-time high for the Nifty Midcap 100. But on that note, it's time for a quick break. Be right back with more. Half of Q4, there were unseasonal rains across the country. So this could have weighed heavy and dampened the summer-related portfolio of beverages, fruit juices, nectar, coconut water. So that could be under pressure. But other than that, Chyawanprash, HPC, that's home and personal care, health, food and beverages are expected to do just okay. So that's largely what we're expecting from Dabur. On the flip side, from Britannia, we're expecting to see yet another good quarter. Revenue is expected to grow 10% and margins over here are expected to expand by about 100 bips. Because remember, the raw material basket for Dabur and Britannia is very different. Britannia has very little dependence on crude since it's largely into biscuits and dairy. So milk, wheat, you have maize, flour, sugar, all of these prices have fallen recently, and on the back of that, margin pressure is not expected for Britannia like it is for Dabur. Volume growth could be anywhere between 7 and 9%, so that also looks healthy, and maybe some pricing action is something that we can hear in the management commentary. So largely we're expecting a good set from Britannia and decent from Dabur. That's the expectation from the FMCG front right now. While we're talking about consumption, of course, all eyes are going to be on names like Titan, Tata Consumer, Swiggy, all set to come out with numbers on Friday. But on that note, let's also welcome on board Mr. Anand Tandon, who's an independent analyst, to give us a fundamental sense of whatever is at play in the market right now. Anand, I've been talking about FMCG. We've seen a good chunk of FMCG earnings already play out, and you have a few of them playing out today and tomorrow as well. So far, what has been your reading on the FMCG earnings? We've seen good volumes, margins have been stable. Do you think that this is the beginning of a structural recovery for the FMCG sector, or it might be too soon to just say it?
You have to keep in mind that FMCG cannot be a very fast-moving sector anyway, right? You are looking at a sector which can, at best, grow in volume terms by single digits. And then you tag on inflation in terms of that, in terms of how the companies are able to manage increasing the prices while keeping their margins safe or perhaps increasing it. So it is this is a year where, or at least a quarter, where you have seen rural India really coming through, whether it is in auto or any of the other consumption areas. So from that point of view, I think FMCG has also done a little better than it has been used to in the last couple of years. But you really have to take a call on one, the commodity prices going forward, as well as the fact that inflation, how much of it can be passed on. So in that context, I would think that so long as you are willing to live with a single digit to mild double digit kind of top line growth and similar kind of bottom line growth, this is a sector that will perform steadily from here.
Okay, that's quite interesting. That's the take coming in on the FMCG place. But I can't get my eyes off from Bharat Forge. It's already hit that 2,000 rupee per share mark. I mean, it's one of those L&T kind of conglomerates. It has a defense and an auto ancillary business as well attached to it. So I don't know what the market is really prescribing the value to today in the stock. But a massive move up is what you're seeing on the stock. This BHEL as well has been going very strong off late. In fact, Kunal, analyze the charts of BHEL for us. It's been very strong the past fortnight.
Aisha, so I think from 300 or 280 levels thereabout, when the move started off for BHEL, it's just gained momentum and strength after strength. It's moved up through that 400 plus mark. I think it's been consistently doing very well for itself. This is a very big breakout for BHEL because something which starts off in such kind of a manner for a couple of weeks, if a stock gives you a return of almost 20-25% in a short span of time, that trickles into a bigger time frame move for BHEL. And the good part is that the stock has not just come back towards a multi-year high, breaking past about this 400 levels. It's also confirmed a breakout on the indicator front on the monthly charts. Apparently, indicators breaking out on the long-term charts is something which is a very rare sight because they take a lot of time on the long-term basis. But when indicators start to show signs of strength, that's where the move trickles into a long-term up move. So this, I believe, could now be a very strong candidate of a multi-month, multi-quarter, even a potential multi-year upside from current levels. So strong recommend on a buy on BHEL at current levels, and especially on decent dips. I think a 10% correction broadly from a swing high is generally considered to be a very good opportunity to add or accumulate further.
Okay, so that's on Bharat Forge as well as BHEL and some of the stocks from the defense pack that are looking very good. Arpit, let's talk about some more gainers from the broader end of the market. We've spoken about Paytm, PB Fintech, so those were some of the top gainers. And of course, Godrej Industries too, that's locked in upper circuit. What about something like a Tejas Networks? Yet again, very strong volume seen. The stock is seeing gains of 16%. And in the last 1 week also, the stock has rallied quite significantly. How are the charts shaping up for this one?
So definitely very good action is seen in the broader market. And if you talk about the Tejas network, if I look at the monthly setup, the stock is almost up by 30%. And if I look at the bigger time swing structure, so continuous selling was seen from around 550, 560 levels. So looking at the overall setup wise, after a very long time, it has managed to surpass this 200 demo with good surge in volume. So overall, the counter would definitely can see some more uptick towards 580, 600 levels, but the stock is already sharply up by almost 25%. So it's better to take a breather. Some dip around 505, 510, 515 levels will be a good entry point with major support around 480 levels. The stock can slowly, steadily can see a move towards 580, 600 plus zones.
A sense on where are you seeing SBI's quarterly numbers for quarter 4? What kind of performance do you think SBI will deliver? And also more importantly on the PSU banking space, how have you looked at these numbers? What have you made of these numbers so far?
Well, I can't comment on SBI specifically. I'm sure some analysts will be better positioned than me. But in terms of the numbers, obviously, the banking sector is probably at the pinkest of its health. The only challenge is whether from here on, whether the margins will start to squeeze, the NIIs will start to squeeze because, there is a lot of competition now in terms of trying to raise deposits. CASA has been shrinking, and that can put some pressure on names because with the credit growth being where it is, there is suddenly now demand for money. And if RBI tries to keep interest rates on the lending side somewhat within range, the banks have to become a little more efficient in terms of lending at lower rates. So from that perspective, there may be a little bit of a pressure on the NIMs, but for now, balance sheets are the cleanest they have been, in a very long time. The capital adequacy is fairly high, and the growth has resumed. So one can't complain.
Okay, so that's on the private banking space. Now, some of the other earnings to watch out for Friday are going to be from the Nifty heavyweights other than SBI. There's Titan as well as Tata Consumer. On the FMCG front, we're expecting a very strong set from both of these companies. Under the Tata Group, Titan also, we're expecting to see some good growth in jewelry. Watches are expected to be slightly weak, but other than that, there are other ancillary business like handbags, fashion, all of that could do well. And that jewelry EBIT margin continues to be around 11%, around the management guided band. So at least that's looking good. For Tata Consumer too, we're expecting to see a very good number. Salt, coffee, tea, all of those segments could do very well, and volume growth is also expected to be very healthy. Kunal, give us a chart check first on some of these heavyweights, like we've spoken about Tata Consumer earlier, so now let's focus on Titan. How is Titan shaping up on the charts, and what would be some key levels to watch out for?
Yeah, this is a bit of a strange price action for Titan because it was actually going into that phase of market volatility. Titan was apparently one of the stronger larger cap names, which actually managed to ride through the major part of volatility, even at a point where I remember, I think when gold prices were shooting up higher significantly, the fag end of 2025 and early or the first few weeks of 2026. Even in that phase, I think Titan managed to hold on to its support levels and then show signs of strength. Had recently, I think, broken past over the highs of 3,800, 850 mark. But I think now in the last 1 or 2 weeks, the stock has apparently gotten a little bit more sideways at 4,300 levels. Difficult to call in a trend over here for Titan because maybe I think traders are just about taking a pause over here, waiting for the results to come out, and then probably try and take position into the stock once the results are delivered. So I'll just probably keep this on the sidelines, not initiate any kind of a trade over here, because such kind of consolidations could be very difficult to try and fathom the next trend. So breakout above 4,450 mark is something which could take the stock significantly higher and break past about the previous lifetime high levels. But till the time it doesn't happen, I think it's better to wait.
Well, it's the wires and cable segment as well, which is looking very strong. Look at the move coming in on Polycab. I don't know whether that's getting replicated with the rest of the sector constituents or not, but KEI, etc., should also come up for you on your screens next. Polycab, of course, is really rip-roaring today, a 7% move up. No, not quite the case with KEI for sure. That's a little bit soft in trade as we speak right now. But again, Anand, with this entire EMS space, in fact, it's really all about what valuation is comfortable when you actually buy into the stock. But growth-wise, what's the visibility that you have?
Power as a space generally is going to be in high demand. We've already reached the load that was projected for 2030 has already been reached. So there is going to be a lot of investment required in transmission, distribution, all of that kind of stuff. So power and cable, etc., will do well. But it is, to my mind, not a very what should I say, margin additive, though the companies are reporting, fairly strong ROEs, which is something which beats me as to why more people are not willing to come in and manufacture the same thing. We are now getting some of the larger industries to also come in, so there may be a little more competition going forward. But given the kind of volume increase that we are likely to see, the more important thing to watch out for will be the cost of raw material. That is something not in the control of these companies, and therefore, that could be one issue that can kind of bring the party to slow it down at least. Otherwise, in terms of demand, I don't see a problem in most of the supplier companies.
Okay, so that's
in fact locked up 20% as we speak right now. We're headed in quite okay, actually. I think today the biggest positive takeaway has been the resilience from the broader market. I wouldn't say outperformance.